So let's take a look at some more examples here. So here we have bearish pin bar. As you can see, like I mentioned before, these generally tend to form at the top of an uptrend. So once price gets into an important support and resistance level, in this case 69.50, it's a 50 level. They are your normal support and resistance levels here as well. This is New Zealand US dollar 1 hour chart. So we get a nice pin bar here. Our entry can be right at the bottom of the pin bar, or like I mentioned, you can wait for 50% pullback. In this case, we do get that 50% pullback that we tend to see. Stop loss would go above the pin on the other side of your support and resistance line, right over there, and you're looking for price to just come back lower. So you're looking for the next important support and resistance area that you can see, and you can either put your exit somewhere in here at the next support and resistance area, or if you're just watching the trade, just now we have a bit of a pin bar on the other side, and here, as you can see, you can even exit the trade after this big green candle, because chances are price is going to go in the opposite direction once we start getting huge green candles. See here, all we saw was red. So we entered our trade and then just kind of chopped around for a little bit, which we expected because we do have support and resistance here. And then, but it never went to our stop. So we just stay in the trade till we get to our exit because of support and resistance right here, or we can just wait for it to give us start showing pins in the bottom, or at the at the close of this candle, because that's a nice bullish candle, time to exit the trade. Do I look at volume on when these pin bars? I tend to look at volume for everything. So it doesn't matter what kind of trade setup it is. If you're in a trade and the volume confirms that the trade we are seeing more, in this case, bearish volume come into the market, that's usually a good sign, because that just confirms your level. In terms of the pin bars, you can trade them without looking at the volume, or in my experience, I have found that I can trade them without looking at the volume, and then generally the volume will kind of follow the pin bar, so volume will start to shift. But in terms of just the volume here and other things like that, I like to use confluence. So if you have more things coming together, it gives you a higher probability trade. So for example, if you have support and resistance, you've got your pin bar, you have a pivot point, or you have volume, or your RSI is showing that market's about to turn, any of those things, whatever you use, it's fine. It's good. The more confluence coming together, the higher the probability that the trade will work out in your favor. So whatever else you're using, if you see pin bar set up with that, the more the merrier. So confluence is a great thing when trading. It just makes your trades more likely to work out in your favor. So here's another example. This is also New Zealand US dollar 1 hour chart. Here we are looking at a bullish pin bar. See, this is our support and resistance right here, and price comes and does a bit of a double bottom here, the wider double bottom, and starts to move up here. And then price pulls back into this level here, right into this support and resistance, and gives us a nice pin bar here. And sometimes the pin bar can look slightly different. Sometimes they look like this, other times they can look like this. Sometimes they can look like that. So so you have to go back on your charts and just play around with it and see which ones you can recognize. See, sometimes there's another pin bar right here. So there are a lot of pin bars that come in different shapes and sizes. So that's why just making sure that they are at important support and resistance area here. So as you can see, price closes up higher. It's not able to get below the 6,800 level, pushes up higher and closes like this, and then you get your engulfing candle. So even before the engulfing candle, again, as you can see price is pulling back 50%, or you can just enter your trade at the top of the pin bar here once the pin body closes. So important thing to remember here is long wick, small body, right? And then you go long in this trade. Stop loss goes below the pin bar here. And if you want it to be even more conservative, you can even put your stop all the way at the bottom here. It's just that then you're looking at a really wide stop loss. So the closer one, the more conservative one, the closer one will be right over here, just underneath the pin bar, with some room for the trade to breathe. And then you're going long, and you just stay in the trade. As you can see, the price is moving higher. It's into the support and resistance, but it's holding above the pin. So you just stay in the trade till that happens. And now we get a very long pin up top. Anytime you see these long pins, it usually shows rejection of price, right? So in this example, price did continue on higher. However, generally, we wouldn't know that the price will go higher or lower. Once you start to see these pin bars, big pins, it just means that price may reject at that level. It shows a rejection. It shows that sellers are starting to step in. And so this would be a good time to close out our trade. And in this particular trade, it's 102 pins from entry to exit. So that's a nice $1,000 profit if trading one standard lot. So as you can see, the 1 hour charts here are quite nice for these pin bars, and they give us nice profit in the trades. Okay, let's take a look at yet another example here. We have dollar CAD 1 hour chart. So in this case, again, we are looking at a bearish pin bar. As you can see, price come to this level. I did not mark my support and resistance level, but here is the support and resistance. Price comes here, pulls back, comes to test the level again, pulls back, and then gives us a nice pin bar. Again, once the price has tested the level a couple of times and rejected it, and then we get a pin bar, that's a really nice setup. It just shows that twice the price rejected the level, and with the pin bar is the 3 times. So this is the 3-time rejection of the price level, which just puts the probabilities in our favor. Okay, so here, once the price pin bar closes, we could take our entry here. Stop loss, as always, will go above the pin. A little bit of room here for trade to breathe, and we we stay in the trade, and then as you can see, price starts to move. And we stay on with the trade till we start seeing this type of, see how price is going sideways now? Here, price is leaning downwards, is moving down, but now at the bottom here, the price starts to go sideways. It's just going sideways, not really doing anything. So you can just, somewhere in here, you can exit the trade. You can exit at the top if it looks like it's going to move up higher. But just in the sideways consolidation, because we don't want to see too much consolidation. Generally, you may see some consolidation at the beginning of a trade, but we do not want to see the consolidation at the bottom here, because we need to see more red candles, which would give us an indication the price is likely to continue. Once you start seeing a lot of green candles like this, that means market is not sure where the price is going. So it's a good time to exit the trade. This was a really nice trade. We had 340 pips, 348 pips in this trade. So that's a nice $3,480 in profit if trading one standard lot. In one standard lot, the 1 pip is equal to $10. So each pip that you get will be worth $10. So in this case, 348 will be worth $3,480. So the question is, once the trade starts to move in your direction, how do you add to your trade? So let's take a look. For example, this one here. Let's use this as an example. See how you have this one would be hard to add to actually. So normally what I will look for is, so if you take a look at this, this kind of looks like an M, right? So you normally would have a neckline at the bottom of the consolidation. Once the price breaks below the neckline, that's a good place to enter. So let me pick a different color to highlight this. Let's say blue, because we don't have blue here. So this is our, so if there's no M, for example, look for your support and resistance level. See, here is our support and resistance level. So basically where the price is consolidating. So once you get a nice solid candle close below that line there, this is a good time to enter the price. But in this case, it looks like something came into the market, whether that was news or a comment or something came into the market and just pushed the price lower. So this one would be difficult to add to, but let's take a look at some other examples and I'll point out how to add to your position. Okay, so here is a recent one. This just, here, this is a Euro US dollar, sorry, daily chart. So like I mentioned before, the higher the time frame, the more room there is for the trade to play out in our favor. So here we have a pin bar. As you can see, price was moving up and then comes to an important support and resistance level here, 116.20 level, and then closes with a nice rejection at the top with a nice red candle close. So small body, long wick gives us our pin bar. And this is where you can just either wait for a bit of a pullback or you can just enter at the bottom of the pin bar close here. And as always, your stop loss would go above the pin, so give it a few pips, and then you enter the trade. It's a short trade, so you're looking to sell here. So as you can see here, you just the first target would be your important support and resistance area, which is right around here. But when you look at this candle, its close is very, very bearish, which means the price is likely to continue lower. Sorry, let me talk about exit first. So once the price starts to go sideways, see, it's not moving any lower. We have red candle, pullback, red candle, pullback. So once price starts to do that, it just means the price is consolidating. So after this point, it can go in either direction. There's nothing saying that it will go up higher, but chances are it may go up higher, right? So we want to close our trade because at this point, it's just a churn. There's nothing really going on. So this is where we would exit the trade. So let's revisit how could you add to your position in this case. So you have a pin bar here, and then you see this nice candle close, this one here. So once you get a nice candle close like this, you can look for a pullback. If you have a pin bar above, generally you will get a pullback right here. So this here you could add, or you can add to your trade once this little pin bar closes right into here. So this will be a good place once the pin bar closes to add to your trade. And then see these pin bars right here. This could be another place to add to your trade. And once the price starts holding the level, you can add. So let me redraw that. So our first support and resistance level right here is this. See this candle close? If you look right over here to the left, this is the first support and resistance level. As the price breaks through this and starts to trade lower, this gives us an indication the price will move lower. So the next support and resistance area is right here. As price starts to trade lower, this gives us an indication the price will likely go lower. So these pins right here, once they close as pins, this is a potential place to add to the trade, and then you start to move lower. So at this point now, this is an important support and resistance area, right, going right all the way to here. Excuse my wobbly drawing. It doesn't give me a straight drawing for some reason, so I'm just drawing with my little freestyle pen here. So once the price starts going over here, so now the trade has moved quite a bit, right? So we cannot be adding any more because it could go lower for sure, but then it's already moved. So once price is so far away from your entry, it's not the best time to add to the position. Then you want to start looking for price to pull back or give you some other sort of entry. So that's in terms of adding, you could add here once the price starts trading lower here, or once the price breaks through this level. These pin bars are a good place to add, and not these ones, because then we are already far away from the entry. So that's not a good time to scale in. So you just stick with the trade, whatever lot size you have, and you let it run. And once the price starts consolidating, going sideways, time to exit the trade. Oh, does the color matter in terms of the pin bar? If it's the red color and you're looking to go short, it just increases the odds of that working out. But in case, for example, but see over here, this is green, but it still plays out. Oops, sorry. But it still plays out. So it's not, it depends. Generally, I would say do some back testing. The higher probability trade will be when, let's say, if you're looking to go bearish and you get a red pin bar, that's a good sign that it will go in your direction. And if you're looking to go bullish, look for a bullish pin bar. However, I have seen pin bars work out even if it's a little bit green, or over here, for example, it's slightly green. It still tends to work out because the wick here shows rejection from important support and resistance level. So I would say just test it out. I look at what's going on in the market before I would trade it. But the best entries would be, if you're looking to go long, enter on a green or a bullish pin bar. When you're looking to go short, enter on a red or bearish pin bar, which just puts the odds in your favor. And in terms of what happens if the pin bar breaks the support and resistance level, for example, this one here, it broke the support and resistance level and then came back and closed lower here, which is great, right? It just puts the odds in our favor. It just shows us that the price is likely to go lower because it's rejecting the higher level. So a lot of times you see the price will break through the support and resistance level, it'll collect all the stops on the other side and then reverse. So there's nothing wrong with that. It's actually the longer the wick, the more it tries to break through and close within our support and resistance area, the better it is, because it's cleared out the boards, all the trade stops on the other side. So it will push the price lower. So let's take a look at this one. This is pound US dollar 1 hour chart, and we're looking at a bullish pin bar. As you can see, price came to this level, pulled back from here, tried to break through and pulled back, giving us a nice morning star pattern here, and then came back and tried the same level third time. And that's why we need to give our stop some room to breathe. Actually, I would even put it behind this pin bar here just to give it some room, because price could come back and test lower again, right? So keep that in mind. So in this case, price does pull back a bit, but at the close of this candle, you can take your entry. Stop can go below the pin. But if you have a lower point here, I would even put it even underneath that, which does make the stop a little bit larger, but it does give you more of a conservative trade, because it gives you more room for your trade to breathe. So either way, entry goes over here, stop can go at one of these levels, and we are looking to go long in this. So first thing to understand about this particular trade is that we are in a consolidation right here. Price has rejected this level 3 times now, so we need to get out of this consolidation. And as you can see, so we have to sit in this trade. That's what I was saying. Sometimes at the beginning of these trades, you may see the price go sideways and not do much. But once this trade starts to pick up, it will just do one of these, right? It just shoots up, and this is an inefficient move here as well. So generally our profit target will be at the beginning of where the price move actually started. So it will be in here. But as we can see, we start to get too many pins on this in this case, and this is a good time to exit the trade. You can either exit once you see this pin or once you get this engulfing candle. Either way, this is approximately where you would exit the trade. And from your entry to exit, we get about 133 pips, which is about $1,300 with one standard lot. So as you can see, a lot of these are on 1 hour charts. So 1 hour chart is a nice time frame to trade this from. So I would recommend testing it out on a 1 hour chart, and just take a bunch of these entries and see where the price lands. But generally, I find that the 1 hour on a Pinbar is an excellent trade. Another question is, if you're in a bullish trade, for example, and price starts to pull back, how do you know when to exit or just hold the trade? So there are a couple of ways that couple of things I do when I'm looking for that. So here, for example, price is, we enter the trade, price holds above our entry and starts to move up. So here price is going sideways, right? Starting to pull back. So how do you decide whether this is just a pullback or it's an actual valid place to exit the trade? So this is what I would do. I would draw my support and resistance levels like this. I like to draw these all the time. I have, when I'm on my chart, so you're always looking at your internal support and resistance levels. There are a lot of different names for it. You can call them internal support and resistance levels, fractals, whatever you want to call them. It's the same thing. They're just support and resistance areas. So I'm always looking for how price is reacting. So if you take a look here, this is your previous support and resistance. See, this is exactly where price tested before it moved up higher. So as long as the price stays above this level, we are okay, right? And then price starts to move up. And next one here is, as long as price stays above this support and resistance, this is a high, this is swing high. So as long as price holds above the support and resistance level, you're okay. So you don't necessarily need to exit the trade. You can wait for it to bring it here and then go up. So as long as it stays, see, this one is another support and resistance area right here on the pin here. If it stays higher, it's okay. So these are some of the ways to manage the trade. Or another thing you can do is just keep moving your stop with the trade. So you enter the trade here. Once the trade starts to move like this, right, you can put your stop on the other side of this candle here, this big green candle. Once the price moves up higher with this candle, you can put it below this, right? So now you are on the other side of the support and resistance. So once it starts to move up, so like this green candle breaks out, you can move it below here, and you can just leave it, let the trade run. And once you have this green candle here, you can move it here. So as you can see, this is where you would get stopped out, right? But you're getting stopped out with profit. So you still have all this profit in your trade. So you get stopped out, you let the market stop you out with a profit. So that's another way to manage the trade. It just depends on whether you're sitting there watching your chart, or you can just do this, just say, okay, this is my important support and resistance area, this is my important support and resistance area, I'm going to take my exit before it gets to this. Like, that's another way to manage the trade as well. So it really depends on how you feel comfortable in managing. But in terms of trailing the stop, just trail the stop, look for the key support and resistance levels like this, right? This one here, and put your stop below it on the other side. So as the price starts to move up higher, see, this is your another support and resistance, put it down here, move it up, and at some point you'll get stopped out. Like, at some point you'll get stopped out, which is good. You get stopped out with a profit. So just goes back to trade management. You're working on your trading psychology. Psychology is one of the most difficult things in trading. A lot of times we don't make profit in trades, not because you don't know how to identify the trade setups. A lot of times it's just because we get too euphoric. We increase our trade size, or we get too fearful, so we get out of the trades early, or we don't get into the trades, and then we see the trade going away from us, and we finally get the courage and enter when it's too late. So things like that come into play all the time. Yeah, so and that happens. You know what, like, even think about athletes when they play, even if it's Michael Jordan, for example, playing basketball, he misses 50. I remember I was looking into his biography, and he said he used to miss 50% of his free throws. There's no defender, and he would still miss 50%. And that's not because he did not know how to shoot a basket. It's just that, when you're under pressure, the mind comes into play as well. So don't beat yourself up for that kind of stuff, right? Just go with it. Trade smaller size and put some demo trades on, so you're not really losing money in that case. You're just practicing. So once you can get a good idea of where to enter, where to exit, and the only way to do that is to go back on charts. So one of the quickest way to learn is to go back on charts or use Forex Tester and test these things out. See how many times the trade went against you. See how far the trade went in your favor before you got kicked out of the trade. So some of those things will help you become more confident in your trading. So let's call it a wrap, and I will see you next time then.